Greetings, everyone. I just returned from a trip to Calgary to meet up with some clients, real estate investor friends, Calvert Mortgages, and attend a friend's wedding in Calgary and Canmore, Alberta. Welcome to the Truth About Real Estate Investing show for Canadians. My name is Erwin. I am a Canadian, host and producer of this show since 2016. 300 plus episodes, and they're all over an hour long. Over 440 million in investment real estate transactions, my team and I are the 4-time Realtor of the Year to investors in Ontario real estate. Presently, I have 45 millionaire clients. That's millionaire and multimillionaire real estate investor clients, and I'd like to get that number up to 200 within 10 years. I'd also like to have dozens and dozens of clients who cash flow over 6 figures a year. Again, I just recently returned, and Canmore and Banff are so beautiful. Lake Louise, shout out Lake Louise. If I couldn't live in BC or Ontario, like most Canadians, I'd probably end up in Calgary, as I like the vibe. The mountain views they're always there and they're incredible. People are nice. World-class skiing is only 2 hours away. Now, apologies to my Edmonton Bull friends and Edmontonians. Admittedly, I've never been, but you Edmonton bullish people need to really talk to your friends in Calgary, as they don't seem to have many nice things to say about living in Edmonton. Maybe it's a hockey rivalry thing. Apologies for their ignorance. I just Google mapped it. I had no idea that Edmontonians have to drive through Calgary to get to Banff or Lake Louise or Canmore. Investment wise, no, I'm not interested in Calgary or Edmonton. The stuff is pricey. Holy cow. And then forget Canmore, where I met with an old friend who is a city councilor in Canmore, and he informed me that the average house price in Canmore is $1.4 million Canadian. And also, I was speaking to a Calgarian in Ryan Day of Calvert Home Mortgages. When we compare numbers, he was sharing how he recently acquired a duplex with a detached garage, and his combined rent, the rent to price ratio, is the same as I can get in the US on a single family home. So I have less tenants, and again, I have the same rent to price ratio. And also for those who already own multifamily properties, like including duplexes or triplexes, ask any one of those investors. If you don't, ask any one of those investors, because aside from how expensive it can be to renovate a basement apartment, I heard from a GTA contractor just yesterday who came into Rockstar Real Estate to share about his services. The estimate, including the permit time and the execution of the renovation, you're looking at 5 to 7 months. So you're 5 to 7 months with the vacant, assuming everything goes on time, and the budget should be around $130,000 just for the renovation. That does not include carrying costs. And again, that's assuming everything goes smoothly. And we're also talking about a house that's probably at least 70 years old. In my experience, tenants. So again, I've done a lot of duplexes. I have a good number of them in my own portfolio. So in my experience, tenants do fight. That's natural. It's human behavior. There's noise transfer. There's smell transfer. I had this one tenant complain about every time the basement tenant was smoking weed in the backyard. Now the tenant has a right to smoke weed. He was actually smoking weed in the shed in the backyard. Yet my main floor tenant always complained about it. Anyways, I'm looking to simplify. I'm on a different journey than most, which is totally cool. Everyone has to go on their own journey. I'm looking to earn US dollars because US dollars are better than Canadian dollars. If you don't believe me, just look at the amount of debt our country is taking on compared to the Americans. Americans take on lots of debt too, but the Canadians are just especially good at it. I'm talking about government. Anyways, I'm looking to make my investment more passive and as passive as possible with as little risk as possible. I'm also making plans to fly out to Atlanta with Cherry to vacation post-tax season. We're going to check out some properties. We're going to make this a road trip. We're going to drive up through Chattanooga, through the Lookout Mountains. We're going to make a stop in Nashville, of course, and continue on our way to Memphis. Along the way, we're going to hit some serious iconic attractions like Lookout Mountain that I mentioned, which is in Chattanooga, which is on the border of Tennessee and Georgia. We're going to visit the Coca-Cola Museum. And of course, you know, when in Rome, the whole thing, we're going to visit Graceland. Jerry and I aren't Elvis fans. But again, when in Rome, You got to check out the home of Elvis Presley. Anyways, tax season ends April 30th, and that's when I that's when I jokingly say I get my wife back. We sold one of our student rentals, which closes May 6th. Hence, we'll be shopping in May for a new income property or two while on our trip. I've had or have 3 listings of income properties at the moment, all the different stages, and I'll update you next week on what I'm seeing in the market on the ground, and it'll likely surprise you. On to this week's show. Someone who's polar opposite to myself. I like lazy investing. We have a fully involved, active investor, including having executed on 150 or some deals in 2023. So 150 deals. So that's almost a deal every other day, basically, and that includes 50 flips. That's 50. And this is Luc Boiron, who is, as far as everyone knows, is legit. He's not one of these fake gurus out there. Luc lives in Ottawa, yet he has flips as far away as Vancouver. And while flips are sexy, people love to watch them on TV or take courses on flipping. Well, I'm sorry, not sorry that we have Luc to share the behind the scenes on why he's flipping, and it's not what you expect. Luc is the founder of Bliss Realty, former lawyer. He also has his MBA. Smart dude, obviously. He's one of Canada's leading investors. He has a massive team, around 30 people, and he has an even more massive advertising budget. But don't worry, Luc's going to tell you how he would start his business over if he was a brand new investor today. So again, he's a legit investor, and he even has some stories about fake it till you make it investors who failed to close on buying wholesale deals from him. So listeners, never forget, the community is a very small one. We all talk. We know who is fake it till you make it, and we know who the gurus are who are fake it till you make it, and where they learned those strategies from. So, as the Warren Buffett says, it takes 20 years to build a reputation and 5 minutes to ruin it. If you think about that, you'll do things differently. Luc also recently launched his podcast, the Selfwealth Real Estate Podcast, available on Apple Podcasts and my favorite platform, Spotify. Again, it's called Selfwealth Real Estate Podcast. Please enjoy the show. Hi, Luc. What's keeping you busy these days?
A lot of flipping houses, a lot of renovations going on. That's what's keeping me busy.
That's interesting because from what I know of you is you do a lot of wholesaling, and now it sounds like your market business has done a pivot.
Yes, yeah. Basically, a lot of our buyers stopped buying flips. So we started buying them ourselves if they made sense to flip and started flipping them ourselves. Um, we had about 35 employees in the business. And if we were just relying on the wholesaling, we would have had to drastically shrink our company and get rid of a bunch of people, and we didn't want to do that. We have a really good team, so we kept our team and decided to pivot, switch into flipping, and now we're flipping heavily. We're still wholesaling. I think 2023 we did something a little over 150 deals in the year.
Sorry, just wholesaling or flips?
Combined, so about
Okay.
50 something flips, I think. I don't have the exact numbers in front of me, but I thought it was more 50-50, but I guess what really happens, the wholesale deals are also much smaller deals, smaller assignment fees. Whereas the flips well, some of them take a lot more time. Bigger projects for sure.
Fascinating. But like your staff though, like wholesaling and flipping are really different businesses. Like did your in-office staff now got to strap on tool belts and start hanging drywall? Like what?
No. I mean, and when I say 30 something employees, that's without contractors. We actually have, in our Ottawa branch, we have 2 contractors and a construction manager. And Ottawa is like our best flipping market. We flip a lot in Ottawa. And that's partially because we have the team here, and I also live in Ottawa now, so I go see the job sites and things like that. And the price point makes a lot of sense for flips, so we flip a lot in Ottawa. And yeah, and then a couple other people who had different roles, like we call them closing concierge, like a transaction coordinator, became a project manager for us. So The way I run the flips is I have my construction manager in Ottawa, and then I have two project managers that are kind of like assistants to me. And so they coordinate with all the contractors and the details. They know the finishes we want to use. And any questions they have from contractors, they either loop me into the call or they relay the questions to me to get answered. And then they're kind of extensions of me to get these renos done. And that's how we manage about 20 flips at a time. Yeah, in different phases.
How many of those are local versus across the country?
Um, I would say a little less than half are in Ottawa, probably about a third are local, 30, 40%, and then a good amount um, in the Greater Toronto area. But that ranges a decent amount. I mean, when I say Toronto for us, it's everywhere from, Hamilton, Niagara region, Kitchener, Stratford, North Bay, Midland, Orillia. These are all flips we've done this year. Peterborough, Lindsay. So those are Bowmanville. Those are all stuff we've done this year. So it's a pretty wide area that we cover that way. And then we have a few flips going on in Vancouver, and occasionally stuff out in Montreal as well. I find it much harder to do the stuff in Vancouver and Montreal. Just Vancouver in particular, we just aren't set up well for the flips, and the distance makes it too hard for us to check out easily. We have, a couple on the ground team for our acquisition, like for our wholesaling business, but we're not set up to flip well there. So I would say our renos took way too long on the last couple of projects there, and the next ones we do, we're going to do only focus on ones that are smaller renos. Just the difficulty to manage renos at a distance can sometimes be a little too hard.
So it's more the distance than say like learning curve or like maturing of the team.
There's an accountability aspect that if you're not showing up regularly, it makes it harder. In Ottawa, and this might be overkill, but our construction manager basically drives from job to job all day. So, you know, he'll visit every job site at least a couple times a week that we have ongoing in the Ottawa area.
Mm-hmm.
And that kind of keeps accountability going. It also allows you to catch stuff ahead of time. And it's a bit of a management error, I would say, on our side. But there's also an element where it's kind of out of sight, out of mind. If you're not, I don't know, for some reason, both myself and the project manager in charge of it, we don't prioritize it mentally as much, the Vancouver job sites. And so we're not as on top of the contractor to make sure they're showing up every day and everything's happening the way it should. So I would say other people could manage at a distance better than we did, especially because we do have two people locally who can check in on the job site if we wanted them to. Plus, we have a really great realtor we work with in Vancouver, who obviously lists all of our properties and also will check in on them whenever we ask her. So I think we could do a better job of it, but we haven't been. So kind of acknowledging we have some weaknesses, and instead of trying to fix them where we're not, it's more balancing how we operate to make sure they're not going to be it's not going to affect us negatively in the future.
So thank you for raising that, sharing your experience in doing heavy construction. Like, maybe that's not a term, but active construction, whatever it is. Because my advice to my clients is, if you're doing a major reno, even if it's like a kitchen redo, bathroom, floor, like that's going to be a couple weeks. And I'm sure it's faster for you. But like, for example, like a basement apartment, that can be months, for example. And so my advice to my clients is, someone needs to show up at least once a week. I mean, almost all of my clients resist, but your experience is the more often you show up, the better.
Absolutely. At least once a week on an active, because I've seen basement apartments take a year, 2 years, right? It's, you get excuses from a contractor. You're waiting on, I don't know, the architect hasn't done the drawings. They're dragging things out. You need to find a new architect. You bring in this contractor. They're blaming delays on the plumber, et cetera, et cetera. And just time disappears. And time is money, especially if you're carrying something on like a private mortgage to get those renos done. Mm-hmm. Really costs money. So you have to be really on the ball with your renos. And I mean, one of the nice things is if you're showing up several times a week to the job site and the contractor's not there, you figure out pretty quick you need to fire them and move on to the next one, right? Like they're not there once, like, oh yeah, well, I gave you a heads up that we were going to be off this week for this reason. Okay, perfect. So you're there all of next week. Great. Show up next week, they're not there. hey, what's going on? Because this isn't working.
Because they will not volunteer information that they're not there.
Yeah, and it helps to put up cameras too. We're not religious with doing this very well, but we use a combination of Wise cams, which are pretty cheap. You can put in the memory card in them, so you can watch the playback without subscribing. With I mean, on a longer reno, it's actually worth paying for internet, but we
Mhm,
often use like SIM card internets with, I think it's called a Rocket Hub or something like that. So it's a
mhm,
wireless modem. We put a tablet SIM card in it, and then it's enough data, 4 to 10 gigs a month. It's enough data to be able to put up a camera or two on the job site. So it helps
mhm,
for, protection of tools and break-ins and things like that. But it
mhm,
also, you're pointing at the driveway, when the contractor shows up,
mhm, mhm.
right?
Yeah,
So
yeah, yeah.
yeah,
I have friends who would they'd pay a neighbor to be able to put a camera on their property, steal, borrow their internet to put the camera on their
that's
property.
smart. Yeah,
Yeah,
absolutely.
and then they'd catch people stealing materials from their site, for example.
Yes. Yep.
So yeah, good pro tip for the listeners' benefit. Now, Luke, before we were recording, like you're probably one of the biggest in wholesaling, definitely wholesaling for sure in Canada. Um, and before we were recording, I asked you how's business. Can you share how's business? We're recording in January, by the way, 2024.
Yeah. I mean, it's I think everyone's hurting in the industry. We we like I was saying earlier, we have a big team. We're basically flipping to pay the bills and stay in the black. We're not trying to make a bunch of money. Though I am optimistic that we should be making money in 2024.
Mm-hmm,
Um, but it's nothing like obviously 2022,
mm-hmm,
2021. It's nothing
mm-hmm,
like those years where the market was crazy hot. Um, because we have the overhead we have, plus buyers aren't buying the wholesale deals. So our margins get thinner, we sell fewer of the deals, and then we need to flip, which takes a lot longer to get the money out of a deal,
mm-hmm.
right? So
It's more
and it's
risk
harder
because
to do the
you're
volume.
having to carry these properties now too.
Yes,
Yeah.
absolutely. And then, obviously there's a reason why we were wholesaling instead of flipping was, you don't have all the transaction costs on the front and back end of the deal. So the flips have to make a lot of sense. So,
Yeah, your property
flipping.
tax bill must be enormous. Sorry, you're like you mentioned Toronto. Toronto's
Oh, the
double
land transfer
tax.
tax. Yeah.
Yeah, land transfer.
Yeah. Every time. Actually, a
Does
little.
Vancouver have anything like that?
Yes, they do.
Oh
Yeah.
God.
No, but it's not. Sorry, it's not. I don't think it's double. I'm trying to think. I don't think it's double, which is good.
Sorry,
And
sorry.
actually,
I interrupted you. Sorry.
no, no, no. And well, I was going to say one of the nice things in Vancouver is they have a different structure for realtors and the way they price things. Um, Again, typical, whatever you expect is typical, but they typically charge something like 7% on the first $100,000 sale price, and then 2.5% thereafter total. This is for both sides. So
Mhm, mhm.
it kind of
Oh.
makes them, hey, we have to fill out the paperwork, we have to create the listing. We get, more early on in at the for the just for creating the listing, we get more on the first 100,000. So if you're listing a $200,000 house versus, you know, whatever, like it doesn't make as big of a difference in the sale price.
Mhm,
So when you're
mhm,
listing, Vancouver is an expensive market. When you're listing a
mhm.
house for, 1.5 million, it actually costs a lot less in commission than it would in the GTA.
And
So
I'll just
same.
add to that, though, like people are free to negotiate. I do
Yes.
believe that structure is legal in Ontario as well. I'm not a lawyer. I haven't looked at. I know you're a lawyer, but I'll actually probably look that up after this show, if because I'm pretty sure that that commission structure is legal in Ontario as well.
Yes. The question is, how do you offer it to because the other in Ontario, depending on the city you're in, the buyer side agent's expecting between 2% and 2.5%, whatever's the
Hmm.
norm in the market. You
Hmm.
try to undercut that, they may not even show the property. I know,
You know,
right?
that's the reality of the market.
The
Yeah.
reality is they may not even show it. So I always pay the buyer's agent whatever going rate is in that market. And there are
Hmm.
some markets where it's 2%, or
Hmm.
somewhere it's 2.25 is normal, some 2.5.
Hmm.
So we pay whatever's normal in the market. But that means in Vancouver, it means we're paying about 3.5 on the first 100,000 and about 1.25 on everything thereafter to
Hmm.
the buyer
Hmm.
side, which is just an interesting structure. And I didn't realize that, going into that market in the first place, which is nice. And yeah,
I just add to that comment. It's with technology and I think we have like 70 or 90,000 registered agents on the Toronto real estate board alone. Uh, you would think prices would come down, like commission, like the commission total commission number would come down. So
You would think, but the result is instead the marketing spend for realtors goes up, right? Realtors just, instead of bringing their commission down, they spend more on marketing, is what I usually see. Because they make so much when you do get a good client, right? Or get a listing with a full commission, you do make such a large amount that instead of cutting down what you're going to make, you just
mhm,
find more.
mhm.
I find you typically realtors find more clients, but a good realtor is worth their weight in gold.
And from someone who does a lot of volume, thank you for the kind words. Now, I want to move on to like you mentioned how it's tough times for many people, and you and
Yeah.
I were discussing before we started recording how there's a lot of people who are talented and are having a tough time, and just like yourself. I don't think you're having as tough time as many people as a lot of people we know. But I was saying how like if you're talented and you're hardworking, survive this period and you will thrive over the long term. What do you think about that?
Oh, absolutely. And you know what? The biggest difficulty for my company, if we're talking about that, is just the size, right? I have 35 employees of overhead to pay. We have, high marketing budget, systems, technology. We have big overhead to pay. If
Hmm.
it was just me, then I would just do fewer deals. But, you know, I'd
Yeah.
make a little less money, but you're not worried about, I would say, kind of making sure you're not losing money, right?
Hmm. Hmm.
Overall, or not losing a lot. You can cherry pick right now. You could be a lot more cautious as an individual investor, but you can still do deals. There's still ways, like there's still opportunities. I mean, with Bill 23, with 3 units going in, some cities allowing 4 or more, um, I find there's still opportunities in this market to even get into the rental space
Hmm.
right now.
Hmm.
I just got final occupancy on a triplex conversion in Ottawa. Um, I finished a coach house in 2023 as well in Ottawa. So there's definitely ways to, I think, uh, to continue getting good properties now because you don't have the same competition. I mean, we were almost exclusively wholesaling for a while there. And then when the market shifted, we started buying not only our own deals to flip, we started flipping other wholesalers' deals because we're like, hey, if people aren't buying our deals, then they're not buying anyone else's deals either. So there's good deals out there. Let me go buy them to flip. And
Yeah,
we
yeah,
started
yeah.
doing that. And we bought off the MLS. In this market, a lot of stuff still sells well on the MLS, but there's still opportunities on the MLS to buy more than there was before because the difference was I found it was very, very hard, let's say at the beginning of 2022, to find a deal that made sense to flip on the MLS because there's so much competition, there was so much interest. You were really, really looking for an absolute needle in a haystack. Now properties are sitting a little more. You have more opportunities to negotiate, to find better deals. Um, it still takes work, but there's always when I started flipping, when I started my business, my first couple deals I would say were listed poorly or incorrectly, and I bought them off the MLS, and that's where I started off with flipping. So I think there's more opportunity to do that now than there has been in a long time.
Hmm.
So
Hmm.
yeah, I think there's a lot of opportunity out there right now, but it makes sense to be cautious as you do it. And if you're just an individual or you have one assistant or something like that, you don't have this big overhead to worry about. So you can wait for the right opportunity. You're not rushing out there
Hmm.
you don't have to be aggressive right now. And I think
Hmm.
that is also a strength, which means you'll have your reserves, you'll be in a good position as the market recovers, which I really think it is going to be recovering well in 2024.
Right. That was actually going to be my next question is you're seeing opportunity now. How do you think it's going to play out for the rest of the year?
I'm seeing I think there's a lot of this comes down to buyer sentiment, both on the investor side and the retail side. Um, I used to sell all of my flips in multiple offers, but with buyer sentiment changing, buyers don't want to compete. And so it didn't make sense to sell things in multiple offers, and it hasn't for, a year and a half now, um, or more than a year and a half now. But uh, you're starting to see a lot of people who think the spring market. So we're recording this in beginning mid-January of 2024. We're starting to see a lot of people thinking that the spring market's going to pick up. And some people are thinking, well, if the spring market's going to pick up, now is the time to buy. So I just listed a property 3 days ago in Ottawa, in a very good area of Ottawa, that I ended up spending. This was a fire damaged house or smoke damage. There was a fire that started in the basement, smoke went everywhere. So I did quite a bit of renovations to this house, like extensive, and it's really beautiful. If anyone's seen it on my Instagram, it's the one where like I took these vintage. I like the design stuff. It excites me. I took these vintage National Geographic magazines that I found in another flip, and I cut out like all the interesting, bright, colorful pictures from them, and I glued them onto the wall as an accent wall in a powder room. Um, so that one's.
Oh, wait, you did it personally? No.
I was there with my construction manager and his girlfriend. We
Oh,
all
I
went
see
to
it.
like select it. Yeah,
I see it
I
on
thought
your
it.
Instagram. Luke Self Wealth. That's right.
Yes, yes, that's right.
LOC. Sorry,
LUC.
LUC.
Yes. No,
It's
no
right in
worries.
front of me, but I sometimes spelled it wrong. L- Luke Luc Boiron is LUC. There's no I don't know how else you spell Luke. Oh, LKE is the other popular way,
Yeah,
right?
yeah, it's the French way of spelling Luke. My family's French, so there you go. But so we did a beautiful reno to it, and it's in a very desirable area of Ottawa with not much. Like, there's actually only one other listing in that neighborhood, and it's sold conditional. So there's nothing on the market. I would like to get into the eights. And so I said, well, let's be a little aggressive with this. Let's see what happens. And we listed for 500,000 3 days ago. And I've have 111 showings booked so far in 3 days.
That's
Uh,
wonderful.
yeah, in this market, right? So
Hmm.
who knows? I've gotten a few preemptives in like the mid to high fives, which I'm not looking at. But I don't know that this is going to work out. I guess my point of this was 111 showings shows that there's buyers out there for the right product in the right area. There's buyers out there. I have
Oh
some
yeah.
rural listings right now. I wouldn't put those in try to do multiple offers in a rural listing. They need the right exposure. One's on 10 acres, one's on 7 acres. They need the right exposure on the market. It takes longer. But the right product in the right area, I'm seeing that there's clearly demand for that product.
Hmm. Hmm.
And as people are worried that prices are going to go up this spring, you're starting to see buyers come into the market now. But let me snap this up before prices jump this spring.
Hmm.
So I'm optimistic things are going to go well. We'll see how inflation holds and how that affects interest rates.
Hmm.
But people are optimistic that we're going to see some interest rate cuts this year. And if
Hmm.
that starts happening, I think the market's going to recover well enough. I mean, we're not talking early 2022 kind of craziness, but
No.
um, I'm expecting to see some positive people coming back to the market slowly. That
Hmm.
because people have really been sitting on the sidelines, especially investors,
Hmm.
as they see the opportunity. Okay, interest rates are starting to fall. If I buy a burr now, I can get a good price on the product. When I refinance, rates are gonna be lower. So if they're judging the market right, that can be a good opportunity to get in
Hmm.
sooner and then um, do better than you'd expect. If you were buying when the market's already recovered, you're going to be paying a lot more.
Hmm. With the bond market coming down already, we're already seeing cheaper fixed rates, right? And a good friend of mine who is an agent downtown Toronto, he told me it's nuts for houses in downtown Toronto, not condos, because
Good. I'm doing a flip in downtown Toronto right now. So
and you pay the double land transfer tax. Your buyer will pay the double land transfer tax.
yeah,
So he was telling me about a property. It was listed way low, 750, and it drew 25 offers, and it ended up selling for almost 300,000 over. So
well,
my money is on you getting at least a dozen offers.
I'm hoping so. I'm thinking, and that's the thing. If I get a dozen offers, I'm taking an offer.
Hmm.
Um, there's no way that I get a dozen offers and I think, oh, I can do better waiting. There's no
Hmm.
way. If I get two offers and I don't like the best offer, then I may, cancel and relist at around where I want to be. But if I get, 10, 12 offers on offer day, there's no way that that's not the best I'm going to
Hmm.
do.
Hmm.
So I will be taking whatever the best is at that point.
Now, again, as a professional investor, would you get this many showings if your property was tenanted?
No.
As nice as it is,
My poor tenants. I mean, we're talking, this is back-to-back showings constantly. They're double booking time blocks and stuff like that. So the poor tenants would be driven insane.
Hmm.
Yeah.
Yeah, I just want to throw in there that it's almost as if, if a property is tenanted, it's almost a stigma against the property.
Yeah. And then like I would say where a lot of my rentals are when I'm, and I'm talking like bungalows in Ottawa or things like that, or condo townhouses, I would expect them to sell for almost 50,000 less tenanted. I would expect that because unless it's unless it's like made for investors as a product,
Yeah,
then at
yeah,
that point the fact that it's a rental is fine. But if even as a duplex, your best buyer, and it may not be a full 50,000 discount on a duplex for tenanted, but your best buyer may be someone who wants to live upstairs and rent out the basement, right? So having the upstairs vacant would
hmm
be, and honestly, getting good rent in the basement with the
hmm
upstairs vacant is probably the best way to sell a duplex, if in my opinion. But
hmm
yeah, if it's just a single family rental,
yeah, yeah.
some of mine are, um, yeah, you're gonna do way worse with a tenant in there.
Yeah, a friend of mine bought a duplex in downtown Toronto, and he asked me what should he do with the basement. He's gonna live in the main floor. He's gonna house hack. I said, absolutely don't rent it to a long-term tenant. You're living in it. You are allowed to short-term rental it. So
Yep.
that way you avoid the RTA, the LTB, right?
Yeah. In some ways, it's almost better to not have bought a legal duplex in that way, because then you're renting just part of your house, from because you're living upstairs.
Hmm.
So
Hmm.
if it's an in-law suite,
Yeah, yeah, yeah,
even if it has a separate entrance, you're essentially renting part of your house, and now it's, you're not having issues with the Airbnb rules in Toronto.
yeah,
I would think.
yeah.
I don't have any
Because
Airbnbs in Toronto.
I don't either. I just don't have enough friends who've had nightmare stories with. Could you just imagine, like, you're renting out the basement of your home? Say you live there and you rent out the basement of your home, and the tenant doesn't pay you rent. Now they park their car in your driveway. There's no way you're not seeing them,
Hmm.
right? And they're in your home and not paying rent. So this is why I told my friend I would not do long term rent tenant in your house. He doesn't
Yeah.
need the money. Just do short term rental. Hire someone to manage it.
And I would think even if you do long term in your house, if you can, I would try to get a property manager or someone else to manage it. Just pretend you're a tenant as well.
Hmm.
Because if they're angry at, let's say, the landlord, you don't want them taking it out on you while you live there, right?
It's a good pro tip. It's a good pro tip. But with affordability the way things are, like almost everyone is trying to avoid long term tenants, right? Because it's almost impossible to cash flow anything in Canada in long term rentals,
But
especially
landlords are
Ontario,
the
BC.
problem. We're hoarding houses and making it that other people can't afford to live in them.
Yeah.
And
Okay, I hope no one clips that because you have a lot more property than most people. I'm quoting Luke. Luke just told us what everyone's problem is. We need to vote these people. We need
well,
to tax these
actually,
people.
one of my favorite things to do when we're building or renovating is actually adding units, because I feel like I'm adding to the housing stock. I actually take personal pride in that. When I build a coach house, it's a new rental. When I do a duplex, now two families can live in that home. My property in Welland, it was a 12-unit purpose-built apartment building. I
Hmm.
converted it to 17 units, so I added 5 new units to the building.
Hmm.
Um, that kind of, I don't know, it gives me pride that I'm creating more housing when we have such a shortage of it. And if someone gives me shit about, oh, you're taking housing away, I'm like, I've added housing to the housing stock. What have you done?
Hmm. 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 I agree.
Just
And that's why I really like the model versus like pure like buy an apartment building and renovate and stuff like that. Like, versus when you're creating housing units, you are benefiting society.
yes, absolutely.
Right? Supply is what we are lacking. We can't control demand. We can control supply though. So let's do the right thing.
And there's so much more the government could be doing to incentivize supply instead. So both provincial, federal, and so many municipalities, they just put up so many roadblocks. They make it so much harder than it needs to be. Um, and yet they're letting in so many immigrants. So we're gonna have such an issue with housing, and I don't know. I think it's gonna get more and more combative between
Yeah.
people, blaming landlords when realistically, I think it doesn't make sense people blame landlords because they're taking housing out of the housing stock. Like, no, they're not leaving the house empty. Somebody's living there. It's in the housing stock. Even the Airbnb rules are, in my opinion, really dumb because if you take, um, first of all, if I'm visiting another city and I have a family with me and I have a dog, it makes way more sense for me to stay in a house rather than a hotel. But on
Hmm.
top of that, if you have enough Airbnbs operating that they replace hotels, instead of building new hotels, they're going to be building new condo buildings or apartment buildings. Or if they don't need more because there's Airbnbs significantly replaced it, you're going to see hotels converted into long-term housing.
Mhm.
So if you let the free market decide, too many Airbnbs, hotels aren't busy, perfect. Now these hotels are being turned into apartments that might join up 2 rooms
Mhm.
and and make it an apartment. So you've seen like around the world it exists where
Mhm.
hotels eventually get converted into long-term residences.
Mhm.
You would see the same thing, except you see Airbnb come into Toronto. They um, they write all these articles. They get interviewed on all these articles about how Airbnb is ruining the housing stock. And guess what? The founder of Airbnb is a municipal lobbyist who was paid by the hotel industry to
Love
write
it.
all these articles and be interviewed. They did a really good job at lobbying the government and changing public perception to make Airbnb the issue. It's yeah.
Which is dumb because if you look at the source problem, like just look at zoning for downtown Toronto, for example, you'll get full support to build a office building, which you can't, which nobody wants.
Yeah,
You want to build a condo tower, everyone's going to fight you,
everyone.
and
Yeah.
then it's going to be rent control. I
You
know
know
it's not
what?
rent control right now, but when Doug Ford leads office, which he will eventually, does anyone think the 2018 rent control exemption stays? Right? If we get an NDP or liberal government, which is likely, because Doug Ford can't stay in office forever. But yeah,
Yeah.
but I
Yeah,
digress.
and that's why I don't actually think the removing rent control actually helped that much in building new housing stock because by the way that they removed it, like when Kathleen Wynne removed rent control, um, and Doug Ford put it back, he didn't put it back like retroactively.
Yeah.
So it basically means, oh, okay, so if I build something new, takes me 5 years, Doug Ford's out of office by then. No, now I'm no longer getting exempt from rent control. And why did I, build this? Like it didn't help the idea
Yeah.
that I was going to be able to keep rents along with market
Yeah.
kind of thing.
Yeah. Because things change is the
So if
point.
Doug Ford had retroactively said, okay, no, we're going back, anything
Mhm.
built after, was it 91, 96, something like that, uh, that Kathleen Wynne had
Yeah.
gotten rid of. It was somewhere in the 90s.
Yeah.
Um, that if they went back to those rules, then you would have been like, okay, so I may temporarily lose the ability to increase rents, but then as another conservative government comes back in eventually, they'll retroactively make the same rule. So I might as well, I can build. I can build. I know at some point, it's not like it'll be 20 years straight where I can't increase
Mhm.
rents above,
Mhm.
the capped 2.5% or whatever, or lower.
All right, Luke, we can talk about the subject forever.
Oh, for sure.
I'd love to over drinks, but I think what our listener would really benefit from would be, for example, if you were to start everything over again. So say you're brand new. Uh, what are your first steps as a brand new wholesaler in this market, wholesaler slash flipper?
I think the big thing is not spending a ton on marketing cost. So I'd probably be looking for, assuming I'm starting with not a lot of money, and I'm just doing it on my own. Uh, I'm looking for deals on the MLS, right? And now those are hard to wholesale, but if you find a good deal, you can flip it. So I'm going to networking events and I'm finding a partner who's willing to fund a good flip, someone who knows what they're doing, and they say, okay, you're right, these numbers look good. Let's do this deal. So they'll fund it so they can get a share of that profit. And then yeah, I'd be looking on the MLS. The like I said, my first two flips when I started doing this whole full time in 2016. And I bought my first rental in 2007, so I already knew how real estate worked. So I was fortunate in that way. But my first two flips that I bought in 2016, when I went into a full time, one was listed low, but on outside of Toronto board, and it was right before the Thanksgiving long weekend. So it didn't hit Treb until the Tuesday, but I saw it on the publicrealtor.ca because it had showed up. I think it was a Fergus board or something somewhere near Guelph.
Yeah,
So that's why it showed up on
nice
realtor.ca,
spot. It's a nice place.
yeah,
Yeah.
but it didn't but the property was in Brampton. So it didn't show up on Treb yet because they'd listed it on the Friday, but they hadn't managed to cross list before the weekend.
Yeah.
So it didn't show up on all of the alerts for all of the local realtors, and
Yeah.
yet the price was right. So I went in, I managed to see it on the Sunday. We got a deal signed on the Monday before it hit the market to everyone else on Tuesday, and it was
Yeah.
a really good price. Um, I think it was a semi. I ended up making 80 grand on that. Um, in a good market. And
Hmm.
then another one was listed. MPAC had it as 4 bedroom, but and three to 4 bedrooms can, depending on the area, they may or may not be worth more as a 3 bed or a 4 bed. In
Hmm.
this case, in Brampton, in that area it was in, more bedrooms tends to be better. So they'd taken down a wall. They listed it as a 3 bedroom because they wanted a bigger master. Listed it as a 3 bedroom. MPAC still had it as a 4 bedroom. So I did some renos to this, but the biggest thing I did was I put the wall back up. So now I'm selling a 4 bedroom in an area where 4 bedrooms sell for more. And I actually bought that one. I think there was 5 offers on it. I bought it in competition, and then I flipped it and I made like 75 grand.
And the
So
wall doesn't cost that much money to put up.
no, no, very little. I mean,
Taking out a wall is way worse.
I, we refinished it. We put new, I think quartz counters in. Like I think it was ended up being a 40 grand reno. And with
Hmm.
the way prices are right now on renovations, it'd probably be a
Hmm.
60 or 70 grand reno these days. But it wasn't like a crazy reno. I didn't have to redo everything. The upstairs bathroom was already good. I kept the cabinets. There was a lot I could keep.
Hmm.
So yeah, it turned out quite nice, made a good profit. And that was buying it in competition on the MLS because I saw something the other buyers didn't see, that 4 bedrooms in the area sold for a good amount more than a 3 bedroom. And yeah, I was able to find a buyer that way.
I just want to go deeper into that hack you did with the MLS. For listeners' benefit, for example, if I'm listing a property in Hamilton, I list it both on Toronto board and Hamilton board. Now, there's lots of lazy agents. If they're an out of town agent, they'll list it on the Toronto board only, and then that way the Hamilton board agents do not get notified. So then, if you're trying to buy that property, you're not competing now with the local market, which is generally significantly bigger than
Yes.
the outside of Hamilton market.
Yes.
So that for us, that's been a regular opportunity, because again, now you're dealing with an out of town agent who doesn't know the market well. They probably don't even want to make the drive. They just want it gone. They don't know the market. They don't want to come out, right? So they just want, generally they want it. They just want to get the deal done.
And you know what? This agent was going to list it on the Toronto board. It just didn't get cross-listed in time. But
Hmm.
I guess what I'd say about that is if you're looking for opportunities, you'll find it. A kind of stupid quote that I like is you can't get hit by the money truck if you're not standing in the street. So if you put yourself in a position where you're regularly looking for opportunities, you'll find them, but you have
Hmm.
to be putting
Hmm.
yourself in a position to look for those opportunities.
Now, as a source for deals, we were talking about like you've had not so great experiences with investors who are not that experienced yet their social media profile tells you that they've
Yeah.
done 50 deals in the last 2 years or something.
Mhm.
Can you, without naming names, because we innocent till proven guilty, we're not interested in getting sued by anyone. Uh, the term I don't think you mind. The term you used was "fake it till you make it," and I'll elaborate on that just for the listeners' benefit, because we've seen that through history. Like for example, Elon Musk. Even though I'm a fan of Tesla, I own a Tesla, drive Tesla. The very first Tesla that was on the stage that they used to pitch and raise money for Tesla did not drive. Right? They had to push that car on the stage. It did not go anywhere. Right? Yet he was able to raise millions of dollars. So fake it till you make it has been big through history, and unfortunately, you've had to deal with these people in real business transactions.
Yeah. So, one example, one thing that I look at is, and you see this from dealing with investors, it's having a good eye for this. Some investors are really good at doing real estate and either aren't good at or don't put much work into raising money. And some investors are really good at raising money. They're not particularly good operators of real estate. And if I had a choice, I would invest with someone who's a good operator of real estate every time over someone who's good at raising money.
I
Like,
can't agree more.
um, and you may even get, they may even be offering better returns, let alone, the result will be better, but they may be offering better terms because they're not focused on raising money. So they're not as, they don't have as many people offering them money, which means, a lot of people some people don't like raising money. I don't particularly like raising money. I'd rather not have to do it when I do it.
Hmm.
Um, because I'd rather just focus on the real estate. I love real
Yeah.
estate,
Yeah. Let's just
So
drill it down on a little bit. So I'm the same way. I
yeah.
don't want I don't want another person wanting to hold me accountable to something. I don't want to be answerable to someone else. That's why I became an entrepreneur, right? So I don't have to be answerable to an employer. So that's personally why Cherry and I do not have partners in our investment property. So sorry, continue.
Yeah, and I also find like I don't like the idea of losing someone else's money. So I'm basically, let's say if it's an equity deal, um, I'm gonna protect your downside, but then also sharing the upside. And it's like, well, why am I doing that?
Yeah,
Right?
same. Yeah,
Yeah.
I'm doing all this work. You're not doing any work. I value work over capital and credit, right? Like like help. Like that's my personality as well. I prefer people to help than I prefer like gifts or anything like that. Yeah, sorry. Continue.
Yeah, and just a quick, my first few flips I did with someone else's money, and I would partner with someone, and they would get half of the profit for putting in the capital for down payment and renovations and carrying costs. So they'd put in all the money. I would do all the work, find the deal, manage the renovation, sell it, etc., and
Yeah,
then they would get half the profit. So
yeah.
um, that actually can be very, very good return for
Mhm.
someone. But for they were taking a chance on me as well, so they made really good returns, uh, and I didn't need the capital. So it's a way for people to get in, but obviously you don't want to be losing someone else's money. But yeah, back
Mhm.
to the fake it till you make it. So I've seen some of these people who are kind of more about raising money than they are about operating. And one example is someone who's kind of well known as an investor, has a lot of partners or raises a lot of money. They called us up for one of our wholesale deals. This maybe a couple of years ago now, and they had a JV partner that they brought in that was going to buy the deal on paper, or actually buy the deal, right? Because that's the way the JV partnership works.
Mhm. So they're going to be the owner. They're going to finance it. They're going to put up the money.
Exactly.
Yeah.
So this investor asked us, "Oh, can we push the closing back, a couple weeks?" And we spoke to the seller, and the seller said, "No, we can't. We're buying something else." We come to the week of closing, the JV partner can't reach the investor, hasn't heard anything from them. They're very frustrated, this JV
The
partner. We can't
passive
reach.
partner can't reach their
Yes.
investment expert
Yeah,
partner.
exactly.
They're supposed to be putting in all the work.
And so we get to like the day before closing, finally hear back from the investor, and they're like, "No, we need that extension we asked about." And we're like, "Okay, now we have no choice." Obviously, we go back to the seller with egg on our face, basically saying, "We can't, this isn't going to close. We can't close, tomorrow. We have to push back." Puts them in a bad position, makes us look bad. We managed, the deal does end up closing, but there was a lot of frustration on everyone's part. It's just lack of responsiveness, probably taking on too much at once for this investor, doing too
Hmm.
many things at once.
Hmm.
Um, but that's a really bad business model to not communicate with everyone going on. And um, yeah, so it was not a great experience. Another one we've had is a group, kind of a training group that
A
some people
tribe,
may
if
have
you
heard
will.
of.
Yeah.
Sorry?
A tribe, if you will.
Yep. There was a lot of more, I would say, instead of focusing on the fundamentals of real estate, how to invest, they focused on mindset, which mindset can be really important if mindset is your issue, but you can't also get out from the fundamentals. So
Yeah.
we ended up being
Yeah, I
almost
can't mind
getting,
myself, my mindset myself to be Elon and then build an electric car. I
yeah,
have my shortcomings in the engineering space. Sorry.
exactly. Right. So it becomes more difficult. We ended up to the point where we almost wouldn't work with people who were associated with this because this happens to us several times. They would essentially lie to us. We'd be like, okay, so you have your financing in order, you're pre-qualified, or you have a private lender, you have the cash available. Like, oh yes, we have it. I have lots of cash, no problem. We won't have any issues paying your assignment fee and closing on time, et cetera, et cetera. This happened with several, at least three that I can think of, people associated with this group that they buy the deal from us, promise all these things, give us a deposit, and then we see them on social media trying to raise money for the deal. And then they
Which is
can't raise.
illegal.
Well, and they're firm on the deal at that point,
Oh my
right?
God,
Like,
the risk.
yeah, they're firm on the deal, and then they can't raise money.
Right.
They
This is
don't
all like
success.
this is all like, like burn the bridge, burn the ship. We're gonna make this work. Strategy.
Yeah, and I mean, we hate that because we're a lot of our sellers are in positions where they need this to close. Like we're trying to help them out. And if one of our buyers can't close, our contract typically has us relieved of liability, but that doesn't matter in the same way as like this is screwing over the seller.
Yeah.
if you
Yeah.
can't
Because these are
close.
human
So
beings, right?
yeah. So, we've had to negotiate some extensions, and I think in all three of those cases, we had to find another buyer kind of last
Oh,
minute, and we were able to. So,
right.
we might be
So it's
walking
double the
away
work for
from,
you now.
well, and we might be walking away from an assignment fee just to get the deal to close. Um,
So lost income
Possibly,
too. You're working for free now.
yes. Yeah. And so we typically don't ask, our buyers to prove that they have the money, but that's something, sometimes we may have to
Yeah.
if they can't show that they've had experience and know what they're doing. Because
Right.
buying from a wholesaler for your first deal ever, I don't recommend it highly unless you really, have done your research and you know what you're doing, because
Or
there
have
is
construction background like that. Those things will help you out.
absolutely.
Yeah.
There's just more complexity to it in terms, not complexity, but you're typically not able to finance the assignment fee, except with some mix. Like one I work with closely is Calvert out in Alberta, and
Hmm.
they'll finance the assignment fees as well, as long
Hmm.
as the deal makes sense. And they run the numbers on the deal as well, to make sure they agree that it makes sense.
Hmm.
But a lot of banks won't lend on the assignment fee. We've seen it happen a few times, but typically they won't lend. So what I mean by that is, if you buy a house for we buy the house for 500, you're buying from us for 520,000. The bank will look at, okay, we're going to lend you 80% of 500, not 80% of 520. So you have
Hmm.
to pay the 20% of 500, which is 100 grand, plus the 20K in cash. So you need 120 instead of 80% of 520 would be 416. So you need 104 instead of 120, right? So you're funding more out of pocket in cash. So that's one thing. And then it just, um, yeah, a little bit. You're buying a property that needs work, or the seller's in distress. So you need to be willing and able to accommodate a little more.
Hmm. And then there's usually have a pretty decent sized project scope size ahead of you in order to execute and get your money out.
Often, but we also have turnkey situations, because we look for a combination of seller distress and property distress, one or the other, or both.
Hmm.
Typically, the best deals are going to be ones where there's both. But sometimes you have situations where it's kind of seller distress, but the property's not in particularly bad shape. So it's more, sometimes it's the ease for the seller, sometimes it's speed that they're looking for. Um, and sometimes the property's in good shape, for example, but they're going to go into power of sale, and they need to sell really quickly because the sheriff's coming,
Hmm.
kind of thing,
Right.
and they want to sell quickly. So that might be a situation where the property may not be in bad shape. It's always going to need at least some paint and things like that, but it's not
Hmm.
in bad shape. Um, but they need speed to make it happen. And
Yeah.
yeah, so a
And that's
combination.
the importance of being able to close on time.
Yes, yes.
So I'll just add that there's like your experience with that one group that was focused on buying with no money down and all sorts of things. Like there's several groups out there, and I've heard the same story from many vendors, not in and other groups as well, how they will turn down that business. I've heard from even like mortgage brokerage groups who refuse business from certain groups, the training groups. Like, please don't send us anyone. Don't tell them you know us. That's
Well, I
usually
mean,
a red
it's
flag.
when you see enough people of it, it becomes a pattern where they must have been told to lie. It's not just that's almost a difference between fake it till you make it and like lie about it. I think that's pushing, I don't know. I think it's pushing it past just like
Hmm.
trying to give the perception that you know what you're doing versus full on lying. Oh yeah, no, I have the money lined up. I have it all. We're all good. And then they don't,
Hmm. Hmm.
That's a bit of a different situation to be. And I feel like that particular group was teaching people to lie, which is not a group I'd want to be part of.
And now the consequence is there's all these people declaring bankruptcy, uh, and they owe money to people. They owe money to friends and family. Like
Yeah.
it's I've never seen it this bad before. And I was in the investor community back in 2008 when we had the financial crisis, when we had a real. It wasn't that bad, right?
Yeah.
This period now is way worse than anything I've seen in my career, in terms of like financial disaster.
Yeah. I just had one property, a rooming house back in 2007, 2008. So it wasn't, if anything, I don't know. I feel like it almost helped me because I had an RBC mortgage on it, and my payment it was a variable mortgage, but my payment stayed the same. So I think I was 4 years into the mortgage of a 25-year amortization, and I think I had 11 years left on it after 4 years on a
Right,
25-year,
right.
because I was paying down so much more in principal because the interest fell by so much. Um, But yeah, I mean, so if anything, it kind of helped me out at the time. But it's different now. And I mean, some of the people, some there's a balance between taking enough risk and not and taking too much risk. And I think I understand people taking a lot of risk early on when they're just getting started, they don't have much yet. Your
Yeah,
first deal might,
when they're single, no kids,
yes. And your first
and they
deal
have a
might be
job
more
that they
risky.
have job income coming in to to balance out the risk.
Yes. Well, and I understand why some people do like they might do an in-law suite instead of a legal duplex, right? On your first deal. But once you reach a certain scale, like you or I don't want an illegal unit in my portfolio.
Hmm.
It's too
Hmm.
risky for me. If something
Hmm.
happens, what if insurance doesn't cover it, et cetera? So you can take a little bit more risks in your first deals, but as you build more, you have more to protect.
Hmm.
And
Hmm.
yeah, that becomes scary. So I don't want illegal units. I don't want things that I know aren't up to code. I'm not willing to take that kind of risk in my portfolio anymore. Um, yeah.
Yeah, I saw a talk by these REIT owners. Very famous story out of Guelph. Two brothers and their friend. I think everyone knows who I'm talking about. If you're in the industry, you know what I'm talking about. But I remember them saying, you can only live in so many houses, so we had to scale up into commercial properties because they had over like 50 student rentals in Guelph, right?
Mhm.
So they're making lots of money. But again, like you can't live in 50 properties.
Yeah. Yeah. It becomes very hard to mortgage and everything, right? Yeah.
Oh, can I just show you? I just want to show you this quick chart and I'll
Yeah.
talk about it to the listeners' benefit. So this is the overnight. So this is a benefit for anyone who's watching on YouTube. Like this is the Bank of Canada overnight lending rate. You and I were just talking about back in like '07. Like
Yeah.
the rates were almost just as high, right? I don't know if you remember, but I was doing like 25% down and 5% mortgages back in 2007, right? So like, and then we're pretty much at the same level interest rate wise, but people were not screaming and crying about like going. People weren't going bankrupt in the community back then. And my comment is about like how hyper over leveraged our community is and Canadians are in general when we have seen rates at this level before.
Yeah. And I feel bad for the people who I think we're doing it relatively right, but there's times in my journey as well where if I was caught at the wrong time, it could have caused me bankruptcy as well. Luckily, I'm established enough, I've been through enough, and I've built my portfolio enough that I have a lot more reserves and protection, and I've been doing it longer. But if I had kind of decided to scale up and bought my first, 8 unit that needed a lot of renovations, right,
Mm-hmm.
at the wrong time, and that was
Mm-hmm.
like, my second or third deal, or a few deals in, and I'm making this one big jump into the next property, and at the wrong time, as everything went wrong with rates and construction expenses,
Mm-hmm.
and you know that there could have been times when it would have put me in a bad position, and I feel bad
Mm-hmm.
for people who are like that. Then there's others that I feel less bad about because it's you had a long time to build this, but instead you didn't structure your business in a way that was
Mm-hmm.
you you made the assumption that the market would always be going up. And that's a really bad way to run a business. If you take that risk for one deal, that makes sense.
Mm-hmm.
You have a portfolio and you have a portfolio of 10 properties and one is a risk, that can be okay because you have everything else as a protection. Everything else is stable and protected. But if
Mm-hmm.
you buy 10 deals and they're all kind of dependent on the market, you're putting yourself in a really bad position. Um, and where you can't do your other deals without getting the right refinance on your other ones, and they're all variable, and and you're not going to qualify if they're at too high of a rate. You're putting yourself in a position where you're risking your portfolio continually all the time.
Mm-hmm.
That's bad decision making.
Mm-hmm. Yeah, I saw a young gentleman buy two properties, first two deals ever. Bought them at the same time in Trenton, Ontario, two duplex conversions, and his plan was to use his personal line of credit for the renovation money to do two basement conversions.
Ooh, I hope you had a lot of room.
A
I
personal
mean,
line? How big can a personal line be? Well, if you're pretty rich, you have big personal lines,
I've
but
seen doctors with big personal lines, but otherwise,
this was no doctor.
yeah,
But
that's risk. I mean, I don't know, but I see a lot of duplex conversions coming in at like 200 grand.
yeah, yeah, yeah. If like I'm seeing retail for just the basement alone, usually around 160, and then the main floor often needs work. So yeah, you can
Yeah.
get so the total budget will get over 200. Yeah,
And it depends what you have to do, right? Do you also have to do the driveway? Are
yeah,
you digging a lot of window wells right to the footing,
hmm
that kind of
hmm
thing?
yeah. Or is it a
Depends.
really big property? Then yeah, the basement's gonna be more.
Yes, exactly. Yeah.
Fantastic. All right, Luke, thank you so much for being generous with your time. We're way over. Any final thoughts you want to share? Like, first of all, like, do you have a book coming out? Do you have a speaking engagement? Like, what are you up to?
I am going to be interviewing you on my podcast shortly. So we have the Selfwealth Real Estate podcast, which you can find on all podcast platforms. Follow me on social media as well, Luke Selfwealth. I've been posting a lot more content about real estate, flips I've going on, my rentals, etc. Um, and yeah, that's about it. Just follow me on socials, listen to the podcast. And my last advice is like, if you're not in the market now, start looking and make sure you know how to recognize an opportunity, because I think there's opportunities coming this year.
Thanks so much, Luke. And I'll, for listeners' benefit, I'll have all the links in the show notes. And then, like Luke, like we were touched on earlier, like the people who got burnt in this period, like if they stay with it, won't they be fine? Learn from the mistakes. First of all, learn from your mistakes.
Yes. Yeah, exactly. Like if you were able to get through this was one of the worst times for a lot of investors nowadays. And I mean, this wasn't like the '08 recession in the US. We weren't hit.
Nothing like
This was bad, but it was bad because, like you said, there was a lot of leverage. Debt got expensive, and that affected a lot of people. But things are going to get better. And I'm not saying it's going to explode like it was, but things are going to be getting better. So if you're able to get through what is kind of the worst time and keep restructuring your stuff, working on what you're doing, you're going to be rewarded going forward. And even if that just comes down to holding your long-term rentals long-term, too many immigrants coming in, not enough housing being built, I don't see any way real estate doesn't get more expensive and that you don't do well holding your portfolio.
That's a great place to end it. Thank you so much, Luke.
Thanks, everyone.
Thank you for watching. If you want to learn how to invest in real estate from scratch, my team teaches beginners how to use the #1 investment strategy that I personally use in a virtual free training class every month. Go to investortraining.ca/YouTube to register for our next class. The link's also in the description as well. I publish at least 2 to 3 videos a week here, so subscribe if you want to keep learning from seasoned investors like myself and my guests. And if you're just starting out, feel free to ask questions and comment below, and I do the best to answer each of those comments and questions myself. Again, if you're ready to learn the nitty-gritty about real estate investing from a professional investor, register for our next virtual class. That's at investortraining.ca/YouTube. Thanks again for watching. See you in the next video.